What's up? What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market, because that is simply impossible to do. And hopefully you're not straddling the fence and you are doing something. Even though things aren't looking that great in the market right now, there's tension between the US and China, job weakness in the United States. Yeah, there's a lot going on. So let's see what happened in the stock market news. It says Dow, S&P 500, NASDAQ slip. A volatile week continues on Wall Street. So what happened? So it says U.S. stock dropped on Thursday as U.S.-China trade war dragged on. And loan losses at regional banks ignited concerns over credit quality. The tech-heavy NASDAQ flipped from solid gains to 0.8% loss, even as NVIDIA and other AI-related stocks floated higher after chip manufacturing giant TSMC's stellar earnings. The S&P 500 fell 0.2%. The Dow decreased 0.7%. So things are still going down. Hey, investors flocked to bonds, with the 10-year Treasury yield dropping below 4%. There's a lot happening, people. A choppy market action remains the theme of the week on Wall Street, despite strong quarterly results from Wall Street banks and hints of coming Fed rate cuts. So regional banks, however, were in the spotlight, with shares of Zions Bank Corporation and Western Alliance plunging after both disclosing problems with loans, adding to concerns over credit stress. There's a lot of stress on credit, people, especially those of you that have a lot of debt, credit card debt, car loan debt, personal loan debt. That's a lot. So chip stocks rose earlier in the session Thursday after TSMC hiked its outlook for 2025 revenue growth for the second time this year, giving hope that the surging AI demand will keep on booming, and it will keep on booming. AI is not going anywhere, people, despite if the market crashes, which it might happen, right? And when it does, I'm prepared to buy more. AI is driving the market. Technology is driving us into the future. So it's not going anywhere. Okay, so the go-to contract chip maker for NVIDIA and Apple also reported a nearly 40% surge in quarterly profit in the last quarter, beating estimates and reaching a record. NVIDIA, Broadcom, Micron, and other AI-related stocks rose. NVIDIA, Broadcom, Micron. They're doing very well. Meanwhile, U.S.-China trade frictions were again in the spotlight after Trump confirmed on Wednesday that tensions with China remain elevated. He told a reporter who asked whether the two countries are headed for a long-lasting trade war, "Well, you're in one now." At the same time, Treasury Secretary Scott Bessent suggested the trade truce between the two could be extended. You need to understand, like, the U.S. and China is in a race to this AI technology. Whoever gets to it and is able to do more with it to advance its economy and country is pretty much the next leader in the world, in my opinion. So that's why there's so much tension. And then there's so much debt that we are in with China. There's so much made in China, but the U.S. is the richest country in the world still. Even though we're in debt, we still are. We still are. And I hope that you're taking advantage of that richness by capitalizing on the money that you're able to make in the United States and living below your means and invest. I don't know if I mentioned it yesterday, but I was listening to someone and it said, the U.S. is a business, and the country is made up of BIC, B-I-C, business, investments, and consumers. Majority of the Americans are just consumers. They work, and then as soon as they get their paychecks, they go to a business and buy and purchase things, right? And the businesses are making a lot of money, but the people that are making the most money are the investors. Investors are capitalizing on the money that the consumers are spending in business, because these investors are invested into these businesses, and they're making hand over fist money. They're being paid dividends quarterly, monthly, just by owning those stocks. So every American needs to become a business owner. And you can be a business owner by simply owning stocks, by owning the S&P 500, by owning Nvidia, Micron, Broadcom, Apple, Meta. You own parts of that business, and because you own parts of those businesses, you're given tax breaks. And most of us are not taking advantage of that. So another headwind, the U.S. government shutdown, which I'm a part of, but I'm still going into work, entered its third week. So that means I'm not getting paid next week. The stoppage, which has deprived the Fed and Wall Street of key data on the economy, is increasingly expected to continue into November. So just think of how many federal workers are dependent upon that check who are not going to receive one. That sucks. That sucks for us. But yeah, that's pretty much it. Oh, another thing. I did some research. You remember I kept talking about the debt that Americans are in. And so I pulled something, the average American household debt and the key statistics. You can go to the Bureau of Labor Statistics. You can do your own research and you can find these numbers. It says the biggest category by far for American household debts is mortgages at $12.8 trillion. I just wonder how many of those out there that are in more house than they actually need. Does that house mortgage take up 25, 30%, 40, 50, 60% of your take-home income? Like you're bringing home $6,000 a month, which is a good income, but you're paying $3,000 a month mortgage or rent? That's crazy. I live by whatever my take-home pay is, my rent is not going to be no more than 25% of that money. And so mortgages account for 70% of the $18.2 trillion household debt load. The median price of a home in America right now in 2025 is $414,000. And that's a big mortgage with even 20% down with the current interest rate. You have vehicles and college educations are expensive too, which is why auto is $1.642 trillion. You have that much in car loans. Student loans, $1.631 trillion. And credit card debt in America is only 7% of the overall household debt. That is crazy. Crazy. There's a lot of, it says here, debt by age group, 18 to 29 in America. There's 52.6 million of them. Total debt, $1.05 trillion. An average of 19,962 per capita. Ages 30 to 39, there's 46 million. $3.89 trillion in debt. Ages 40 to 49, 41.7 million people. $4.76 trillion. From ages 50 to 59, there's 41.3 million of those people in America. 4.02 trillion. Wow. 60 to 69, there's 40.4 million of those people in the US. $2.73 trillion. I do not want to be in a lot of debt at that age. Damn. From 70 and older, damn, there's still 40.1 million of those people. $1.73 trillion in debt on average. That may not be everyone, but that's on average. And just think about it. From ages 30 to 59 is where the most debt is being carried. Those are the people that are, on social media posting all these pictures of life. Oh, that is crazy. And this is from the Federal Reserve. Age group for credit card debt from ages 18 to 69, 65% is in credit card debt, who carry a balance of 45%. So they're not paying off these balances. Ages 30 to 44, they're 80% in credit card debt and carrying a balance. 53% of those are carrying a balance. Ages 40 to 55, 86% are in credit card debt and carrying a 54% balance. Ages 60 plus, 91% credit card debt, carrying a balance of 39%. Damn. Do your research, people. I ain't lying. Hell, some of you, or the couple, the few people that may watch this, may be one of those individuals that's in a lot of debt, that's living above their means. Pass the word. Get out of debt, people. Okay, so Palantir. Palantir today. What did Palantir do today? Palantir lost $1.50 today, closing out at $178.12. Tesla lost $6.40 today, closing out at $428.75. Broadcom gained $2.82 today, closing out at $354.15. FTEC lost 47 cents today, closing out at $223.73. SPLG lost 51 cents today, closing out at, 51 cents, I meant. You get it, right? Closing out at $77.73. NVIDIA gained $1.98 today, closing out at $181.81. Yeah, and that's it, people. Yeah, this debt thing is crazy. I have another thing that I looked up, and it talked about, credit and debt by race. It's interesting. Maybe I'll talk about that tomorrow. I don't know. Well, it says race. Say whites have 42.2% credit card balances. Average credit card balance is about $6,930. Blacks have 56.3% of credit card balances. Average balance of $4,360. Hispanics have 55.8% credit card balances, carrying about $4,150. Talks about payday loans. This is interesting. Interesting. But again, we live in a country where there's a lot of abundance, and we're just not. We're blinded by it. We're consuming it. That's why they call us consumers, because we consume so much because we're being fed a lot of information, a lot of food. You travel to some place like Japan, and the portions of food is a lot smaller than when you come back to, say, like the United States, and you go to, like, say, a franchise restaurant. You get a plate full of food. You're consuming so much to where we become greedy, and our minds have been clouded to the point where um, we don't realize what we're doing because there's so many people around us at the buffet that's doing the exact same thing. So it makes us feel comfortable because everyone's doing the same thing. However, I believe you're going to have a wake-up call as you get older. And like I was listening to Dave Ramsey, and this one lady called in, said her husband is 66. He's going to be retiring soon. She's 57. He has $300,000 in student loan debts still that he hasn't paid. He has little to no retirement. And she's trying to figure out what should she do, or what should they do, because she plans to retire soon. Do not end up in those types of situations. Don't wait until you're older to start trying to work a plan. Work it now if you can. I mean, if you are older and you have to try and work out a plan, that's good. It's better late than never. But the sooner you start on creating a plan, creating that solid foundation, the better. You need to start thinking about it now. Be that odd man going the other direction while everyone else is going to the left, doing the same old, ending up with the same sad results. If you don't want to be those or be that person, don't follow those people. Or don't follow these people that are in trillions and hundreds of thousands and $1,000s of debt because of poor decisions. And we make poor decisions because we're not educated on what right decisions to make. Really, we learn how to read, we learn how to add, subtract, we learn about history, but we don't learn about credit. We don't learn about investing. We don't learn about owning businesses in our younger years. You know, only after we've taken in so much, only after we've experienced so much, to include trauma, we start learning about or hearing about these things, and it sounds a lot more difficult than they really are. It sounds like something that's not achievable because what life has dealt you. However, if you have been fed this information, you know, starting in elementary school, middle school, high school, it would be normal. It's like it's normal for rich people to be rich because they're born into richness. They're born into information that's not being fed to the average person, right? So we need to start making these things a part of our conversations on a daily basis with our families, if possible, if you have a family. And if you don't have a family, just continue to listen to different podcasts that talks about money. Listen to Dave Ramsey. I listen to a lot of podcasts that talks about a lot of different things that interest me, or I didn't know that interest me, that I found interesting. And yeah, that's what I do. All right, so let me end this video because I'm talking a lot. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, disclaimer, I'm not a financial advisor, nor am I pretending to be one. So, you know, any and all information on my channel is for entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money. You know, invest into yourself, invest into these paper assets that are appreciating over time, invest into real estate that's going up. Invest, people. Do something. All right, take care. Peace.